At the beginning of the year, if I'd asked you if you would expect to see the dollar-yen rate at 136 by June, what would you have said?
I think this is quite a surprising movement, but given clearer policy divergence between the US and Japan, I think in the short term, pressure on the Japanese yen to weaken against the US dollar and other currencies will stay strong. So 135, 136, the level is, the 20-year or even longer record at the moment. But still, I think level is not very strange given clearer policy divergence. But in the medium term, I think we need to think about the risk of the U.S. recession at the earliest in fourth quarter this year, and that may change the direction going forward.
And I guess the Fed has no choice but to keep on hiking, and they possibly will hike us into a recession. Do you think there's any case to make a move of 100 basis points at the next meeting for the Fed?
I think risk of 100 basis point hike is probably limited, as Chicago Fed Evans talked overnight. And I think still a 75 basis point hike in July, and also potentially another 75 basis point hike in September will be a good tightening strategy for the Fed at the moment. So 100 basis point hike is still quite kind of a tail risk scenario to us. And I think still market has not priced 100% possibility for 75 basis point hike for July and September. So if the market prices such a aggressive hike over the next two FOMC meetings, I think that I may trade strongly over the next probably 2 or 3 months into the September FOMC meeting.